Hi, it's Nishi, hoping a really good day. And in today's video, what I want to talk about is how a director's loan account works and what happens when you take too much money out of your business. So before I go into that, I just want to remind you, if you check out our website, n-accounting.co.uk, then there's some really good resources on there and also a way to contact me. So if you want to talk about any of this stuff, then definitely go to our website. Okay, going into this video, what is a director's loan account? So most business owners realize who running their business through a limited company, that the limited company is like a separate entity from them. And what does that mean? Well, the limited company, while it might be owned by the business owner, it's got its own property and it's got its own finances, almost like maybe having a kid. So that's a way to look at it. And one of the challenges that can happen in business is sometimes business owners who own a limited company and work through a limited company look at all of the money sitting in the limited company's bank account as their own money. And this is where this can create a bit of a challenge, because all of the money quite often sitting in the limited company's bank account isn't necessarily the money that belongs to the owner. Maybe some of it is, because some of it might have been generated by profits, but other money sitting in that company's bank account could actually be there to pay HMRC, for example, or to pay other creditors. So there can be instances where sometimes the owners of those limited companies take their profit out of that business, but then they also take money out, which is earmarked to pay things like tax and other creditors. So what happens when that happens is essentially the company recognizes that actually the owner took more money out than they were meant to, and then what will happen is the director's loan account for that company, it could go into a position where the business owner owes the company money, and that's what we call an overdrawn director's loan account, and that can be a bit of a challenge. And sometimes it can also happen because the company might have paid out a certain amount of dividends or salaries, but then the amount the business owner took was more than the salaries and dividends paid, and they didn't want to create more dividends at the higher rate. So this can happen quite often, and and you might think, okay, well, fine, you owe your company money. What's the problem with that? Because you're not going to go and get your company to appoint bailiffs and come after you yourself. But actually, the challenge with it is there's a tax called the Section 455 tax. And HMRC brought it in because I'm not certain, but I believe a long time ago, people were taking the piss, and they were just, instead of paying themselves from their company and paying the tax on their salaries and the dividends, they were just giving themselves really long-term loans, which they'd never have to pay back and never had to pay taxes on. So it was essentially a loophole which HMRC closed by something called Section 455 tax. And what this means is it's like a 33% tax charge on anything you owe your company. So once your company accounts have been done and you haven't once your year end's over and you haven't paid any money you owe to your company back within 9 months, you can end up paying like a third of what you owe to your company over to HMRC as a tax bill. And it's more of a deposit, because what will happen is down the line, you can actually claim that back when you do actually repay your company. But that's in general what I'm trying to explain here, is that it's not so easy to get away with just taking money out of your company that doesn't necessarily belong to you, because there are tax consequences, but also there's obviously cash flow and trading consequences as well, because if you've got creditors who are getting frustrated and taking action against your business, then that's going to impact your business as well. So that's this in a nutshell. But if you want to talk about it, then just go to our website, n-accounting.co.uk, book yourself in for a call there, and we will talk about this and in relation to your own business. Thanks for watching.